Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 2nd of November. I'm Daniel Lam, your host for the podcast. One of the FAQs that we've been getting from internal and external clients alike is whether they should be adding to US equities at this moment in time, as they have entered correction territory. Now, we spoke about this in the podcast this Tuesday, citing possible tactical rebound due to the low positioning. But for a more meaningful rally, we highlighted that two conditions must happen. First of all, there should be a meaningful slowdown in US economic surprise. And secondly, a change in the regime, such as the Fed turning more dovish and suggesting a pivot. Now, even though the FOMC statement overnight was relatively uneventful, with the Fed maintaining the target for the Fed funds rate at 5.25 to 5.5%, the data releases and the press conference suggests that we may be taking, let's say, a quarter of a step closer to the fulfillment of the two conditions aforementioned. So at the press conference, Jay Powell put more emphasis on slower wage growth and inflation and saw more balanced risk of overdoing versus underdoing the hikes. The statement had few wording changes, but the inclusion of a reference to monitoring financial as well as credit conditions gained more importance as the press conference went on. So this, combined with an unexpectedly moderate Treasury quarterly refunding projections and weaker than expected manufacturing ISM, led to a 20 bips drop in US 10-year Treasury yield over the last 24 hours. This decline in Treasury yield suggests that the outcome was a slightly dovish surprise, and market participants reduced the odds of another rate hike in either December or January. Now, technically, the drop is significant because it broke the 4.8% support and may lead to a test of the 4.5% level. And of course, if this drop were to continue, it represents tailwind for the quote-unquote long-duration trades, such as short US dollar, long-dated DM IG government bonds, and long US growth stocks. And, looping back to the FAQ at the start of this podcast, it seems that investors may focus upon the quality stocks that have delivered good results and outlook in the US growth space from now till the year end. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.